Hi, my name is Trevor Beal, and tonight I'll be talking to you about the financial statement analysis that I did on 3M. To start off with, we have cash in 2018 versus cash in 2017. In 2018, 3M had $200 million less cash than it did in 2017. Normally, this would be bad for liquidity, but 3M's current ratio actually increased from 1.85 to 1.89. This means that the firm is more liquid in 2018 than in 2017, even with a decrease in cash. The inventory valuation method that 3M utilizes is the lower of cost or net realizable value. This is defined as the estimated selling prices in the ordinary course of doing business subtracted by the cost of completion, disposal, and transport of the products. Cost at 3M is determined on a FIFO basis. And on the picture below, you can see the inventory levels in 2017 versus the level in 2018. Common equity in 2018 versus 2017. 3M's common equity value is the value of its equity in the market. From 2017 to 2018, this figure decreased by $1.763 billion. In 2017, the value was $132 billion, and in 2018, the value was $115 billion. The operating income in 2018 versus 2017. The operating income decreased in 2018 compared to 2017. The decrease totaled $463 million. The decreases were mainly due to higher selling and admin expenses as well as higher costs of goods sold. You can see on the income statement snapshot to the right that we have revenues, operating expenses, and total operating income or loss, and you can see the differences there. Net income available to shareholders 2018 versus 2017. On the chart on the right, you can see that net income available to shareholders has shown a continued uptrend over the course of the last 13 years. This is always a good sign for a company. Earnings per share, basic and diluted, 2018 versus 2017. The difference between basic and diluted EPS is that diluted subtracts preferred dividends from net income and divides that number by the shares outstanding. 3M has 10 million preferred shares in their treasury, but has not issued any of them. You can see on the right that the basic and the diluted are the same for both years because there has been no preferred stock issued and no preferred dividend paid. Discrepancies between the resources that I used and the company's annual report. So all of the resources that I used had very similar or identical numbers to the annual report on the 3M website. The only difference was the form that they stated them in, such as millions or thousands. So the Stock Scouter and Insider Trades report that I looked at scored 3M as a 7. It cited some statistics where 3M beats its competition. One concerning thing to note that I looked at was that the CEO of 3M exercised two options for nearly 26,800 shares at the end of January 2019, and both of those were executed back to back. And as soon as he executed the option, he went ahead and sold the shares. So that's a little bit concerning because he might believe that the price is at a peak. So that's a concerning news to shareholders. So trends in cash flow that I reviewed was that I noticed there seems to be a negative figure in investing activities every few years. In 2017, 3M posted a $3 billion loss in investing activities. So I dug a little bit deeper into the 2017 number and found that the cause was mainly due to some purchases of small firms. Declines in investment value and marketable securities also contributed to the negative number. Overall, 3M seems like a very stable company. They've generated returns for their investors, and there's net income increases every year that are due to the company's well-run manner. I think that shareholders can expect continued returns, stable returns, and 3M should be considered a good investment.